that many of the times I was surprised were because of things that never happened to me before in my lifetime, but happened many times in history. And the three things that drove me to study this 500 years of history and the patterns were, first, the creation of an enormous amount of debt and the monetization of that debt. Second, the amounts of internal conflict between populists of the right and populists of the left, with the largest wealth and income gap since the 1930s. And third, the rise of a great power, comparable power to the United States in the form of China, to create a great power conflict between not just the United States and China, but also its allies. All three of those things I knew happened the last time in the 1930 to 45 period, but that's a sample size of one. And I needed to see the sample size of many cases. So I studied 10 major empires, the 10 most important ones. And so as you can imagine, each one is an issue. Each one is a problem. And when those three problems come together, that's a dangerous set of circumstances. So that's what prompted me to look at those patterns in history. The patterns that we see in history have cause-effect relationships. It's not so much the patterns, because that would just require blind faith that the patterns continue. But you could see the cause-effect relationships at each time and seeing those. And I'm a very practical guy. Like, I'm doing this not to study history. I'm doing it for the purpose of I have to be positioned today, tomorrow, the next day in the markets to make the right decisions. But politics and geopolitics and all of this economics all matter. What we see, and I measure it in statistics and probability. So you could see it in the book, or I did a YouTube video that also gives a condensed version of that called The Changing World Order. You can see the measurements and you can see it happen repeatedly. And so that cycle, which if you like, I'll describe, that cycle has brought us to a point where there are consequences for the conditions that we find ourselves in. So, for example, today, financially, you have a situation where debt is a stimulant, or credit. You provide credit, you get debt. And so when you need a lot of buying power, central banks inject a lot of money and credit. And when when they don't have a limit on it, like in some eras, it was gold that was a limit. And they would think, how much money do I have? And that would affect how much they spend. That is no longer the case. So that there is that stimulant, but that stimulant of creating credit creates debt, which is an obligation for paying back, and it is an asset for somebody on the other side to hold, to think whether they're having a real return. So there's a mechanics to that set of circumstances. That means when you have a lot of debt and you have a lot of assets and liabilities that are there, you have to make both sides happy. And so the situation that we're going through is very much that. The coffers are empty. They needed to spend money, and they chose to spend a lot of money on debt. And that produced an inflation because it's buying power. It should not be surprising if you give everybody a lot of buying power, and it's much more than there is production, that'll produce a lot of inflation. And so now we are where we are, in which the central bank is tightening monetary policy. What that means is removing buying power. So you see a situation where prices are going up, and the central bank will remove buying power. And that creates a stagflation environment, and we've seen that repeat over a period of time. Now, when that happens, at the same time as the second influence, that there's a lot of wealth gap and a lot of populism of each side, then there's a lot of conflict, naturally, internal. And populism, where does populism come from? Studying history, we see these patterns. When Donald Trump was elected in 2016, and I wanted to understand why. And that was the first time a populist was elected in the United States under my experience. So I went back and studied populism. And populism occurs when a disenfranchised group says, this is not working for me, and they want a fighter, not a compromiser, to be able to fight for them. And so traditionally, there are populists of the left and populists of the right. So we see this through history. You study the 30s. And you see the internal conflicts of fighters, and that threatens the system. It threatens democracy, 4 major democracies.
Part of what you say, being at this moment in time, is that the US dollar is at some real risk, right? It's been the reserve currency for the world. That's given the US government, the Federal Reserve, a lot of leeway to, for example, during the COVID crisis, print a lot of money and have massive fiscal stimulus. What do you think the implications are if you were talking to finance ministers of emerging economies or lower income, middle income countries? That, you know, they've grown up just like all of us with the US dollar as the main reserve currency of the world. What might it mean if there's currency devaluation of the dollar? What might it mean for them?
What you're describing is true of the 3 major reserve currency. It's true of the United States. It's true of Europe. It's true of Japan right now, all 3 major reserve currencies. For example, there's too much debt in Italy and too much debt in some other countries in Europe. And the circumstances that we're dealing with the ECB is the very similar thing, that they're caught between a rock and a hard place. Either this is going to be paid back with money that maintains its value, or there will be a printing of money and it'll be devalued. And that's what the Japanese monetary policy, and the same thing is happening around that. And that's very much like the 1930s. You could see in the 1930s that there were depreciations of currencies, and then they went more to gold. One currency depreciated against the other. They all depreciated, and then they went to gold as the main medium of exchange, because gold is an asset that is not dependent on the printing of money. It has the intrinsic value, and so that's why they went to that. So I want to emphasize that this is not just a US dollar issue. This is a reserve currency issue. And we're in an environment where they all are fiat currencies, meaning they're not backed by something. And when there's a lot of debt, it pays to print the money, because the alternative is when it's paid back in hard money, that means that reduces one man's spending as another man's income. And so it contracts spending and it produces a depression type situation. So that's the trade-off that we face. And then when we deal with finance ministers of countries and emerging countries, it's very important to try to think about the diversification of reserves. You start by thinking about, first, what are your liabilities in? What is your payments? What do I have to have? And then there's a question of doing the sensitivity analysis of what is the valuation like, and thinking about purchasing power, which also means inflation in terms of that, because the assets that you're holding, whether they're in dollars, euros, or yen, will have a return that's significantly below the inflation rate. So there will be, all of those reserves will lose buying power. So that's what holding debt will be like. And then to think about the element of diversification of reserves to some extent outside of even the reserve currencies, such as gold. And particularly if you just read history and you see, common sense, it means that there should be some amount of gold in the mix, but it all depends still on what the liabilities are to be able to hold the right mix. And it's all connected to the debt cycle, because the buying, when the time comes and you put it in hard currency, even when there was backing in gold and others, they broke the pegs and they devalued and they printed money 100% of the time.